Hey everyone, very good afternoon, good evening to you all. Charles here, FRGNT Daily Chart Analysis, Monday the 3rd of August 2026. And I suppose the time, 20 minutes past 5 local time here in Milan. Good evening to you all. So today, as the day started, the forecast was pretty positive, to be quite honest. A lot of good potentials were coming out of the market. What we saw overnight, through the Tokyo session, or when market opened, we didn't really see any tremendously large market gaps. Really, that's what I was expecting, hence not actually going into too much detail in my analysis over the weekend. I thought, well, as a result of the fundamentals coming out over the weekend, such as what's going on with America and Iran, I figured that, well, we probably are going to wake up to see some gaps created, and then all of those points of interest that we had on the chart, particularly on those lower time frames, would be obliterated. So I didn't want to waste my time. Nevertheless, woke up this morning, as I said, and charts look pretty good. So first and foremost, we'll take a look at the DXY. Overwhelmingly, the DXY, in my opinion, was gauging up for that move towards the upside. So if we go to the charts now, we'll take a look at the DXY to come to the conclusion, or well, to understand the reasoning behind that. So I'm currently on the 15-minute time frame only, but if I do a click here and here, just to have a look at our higher time frame points of interest. So weekly time frame, we're supported to the upside by way of the weekly 50 MA. Not only that, we have this weekly order block in the leg that, of course, once you marry the two confluences up, it becomes a high probable point of interest. But that's not enough in terms of the way that I trade. I need to refine those areas down. So when I refine that weekly order block now, and before I actually go there, let's have a look at that weekly time frame. Higher highs, higher lows, higher highs, potential higher low, or we could see a move a little bit further south. However, until this order block on the weekly time frame has been broken to the downside with a clear closure on that weekly time frame, my thought process is going to be continued longs coming from that higher time frame weekly order block. In addition to that, we would like to see the weekly 50 MA being respected towards the upside. So of course we're going to have the remainder of the week of trading to see how that weekly candle is going to close in relation to the weekly 50 MA and the weekly order block. So there's all the confluence there towards the upside is pretty much what I'm getting at. So when we start to refine those areas down, we can see within that weekly order block now, we're on the daily time frame, bottom right hand chart. I'm looking to refine the order block from the weekly, refine that down and start making those refinements across all of the lower time frames as well. So the daily time frame, it's not as easier to depict, or as easy to depict, I should say, particularly if you start to read it like so: higher high, higher low, higher highs and lows, higher highs, and price comes back down into the area for potential higher low before a higher high continuation. So that's the most easier way, or the easiest way to look at that. Alternatively, the difficulty would be, well, we've made a high, potential higher low for a higher high continuation, hence why on the weekly time frame we also had the anticipation that price could dip slightly lower to the lower weekly order block. So again, there is certainly reason to lose, but most definitely we have to respect what's going on the charts, and that is a daily order block. And what we're seeing is price coming into that daily order block. Let's say on Friday we had a slight rejection, but the importance is we did not close below it. That definitely would have caused a little bit of panic across the charts if we had a daily candle closure below the daily order block, and then of course the weekly candle would be still above that weekly 50 MA. So it was in a good pool. Price was in pretty much the optimal position to look for longs coming from the DXY on the higher time frame. And then of course we just look to refine all those areas down and understand why we're looking for those long positions. 4-hour time frame, where did the most explosive move in the market come from, and did that move leave an order block behind? So absolutely we can see a high created from potentially somewhere in and around this area. Therefore, can I look to refine that area down and understand, as I start to refine my areas down, is there a 4-hour order block there? Absolutely there is. We drag that across, and then we seek to understand whether or not price is being respected, or rather the order block is being respected on the corresponding time frame. that we're looking at. So 4-hour order block, 4-hour candle, of course we wick below it, but as I've just mentioned, the importance of it is the fact that price is not closing below it and price is continuing to reject it towards the upside. So with all that said now, of course on the lower time frames, I'm just looking for clues as to when the DXY is looking to enter into that long move towards the upside in a way that I would be able to trade it if I was looking to take a long position on the DXY. I do not trade the DXY at the moment, but if I can mark the DXY up to the same degree that I would, that gives me a high degree of confidence to say, okay, well, if the DXY has made that move towards the upside, potentially my cross pairs have also broken structure to the downside, and then when, when price returns to the order block that created the break of structure, perhaps I just have a break of structure on a cross pair, a low created potentially into the lower high for a lower low continuation. And essentially, that is exactly what I had done to take my EU position. Now, with that said, I must admit I had a little, I'd call it a 15 minutes of, do I take a long position on AU that actually looks really nice, or do I take what looks to be, I would say, an okay, so here was my dilemma. I'll bring it up, take an okay, or take a good looking position on AU towards the upside, i.e., for me, based on the 15-minute time frame, AU simply on the 15, we're looking at a high created, order block remaining behind. It's a key structure point in the market. Price returns back to that area. We had the 4-hour 50 MA as well supporting that. So it would have just been a 15-minute type of time frame position only. With that said, of course, comes with its own associated risk, as in order for me to take an Asia range position, I don't necessarily need to wait for a high degree of confirmation before looking to take that. But that's the difference between a trader that is consistent and a trader that simply just trades the setup and the strategy without actually thinking a little bit more out the box. Because if I were just to trade my setup and strategy, I absolutely would have taken a long position. There is no doubt about it. I would have taken a long position on AU, and I'm most 100% I would have lost that position. Now the thought process is now, but if I'm expecting AU to move towards the upside, so that's my trade direction, that's what I want to happen. What do I need to see happen to the DXY? The DXY needs to be weak. Now, based on everything that I've already just spoken about, would it have made sense for me to have taken a long position on AU after I've already broken DXY in a way that the DXY seems as if, based on its points of interest and how price is being respected on those higher and lower time frames, would it have made sense to take a long position on AU despite having, in my opinion, what would have been a textbook type of position? Absolutely not. So I put that to one side just for a moment and I said, okay, well, if I'm not going to take an AU long, what about another cross pair for a potential short? So I went over to EU now. So again, looking at everything that we're speaking about, if I'm expecting DXY strength, what would I expect to see coming out of Euro US dollar? I would expect to see the euro seemingly weak against a strong dollar and the euro representing a move towards the downside. Would that have made sense based on my higher time frame analysis? Well, thus far, on the weekly time frame, we're trading out of a higher time frame weekly order block, again supported by a weekly 50 MA towards the upside. Now have a quick look at the DXY. What do we have on the DXY? A weekly order block in terms of an uptrend with price being supported to the upside. So we have exactly the inverse on EU as we do on the DXY. So therefore I have good synchronization across the pairs that I'm looking to speculate on. Therefore, big tick in the right direction. Now, when I look to refine these order blocks down, here becomes a confusion for me. And again, you can of course see why I was hesitant to potentially take an okay looking position on EU and not take what I would describe as a good to great position long on EU. However, I'm using the confluence from the DXY that is a great confluence to support an okay looking position. So as I've mentioned, absolutely we're trading out of the higher time frame points of interest, but when I look to refine those areas down, my daily order block on EU is quite a considerable distance away from where we're actually trading from and where my short position took place from. So if you have a look at the illustration that I put here on the daily time frame, bottom right hand chart, you can see clearly that price is stepping down, making, let's say, lower low, lower high, lower low, lower high. As a result of making that low, that confirmed the lower high, allowing us to put the order block. So of course, naturally, I would expect price to want to gravitate back up towards that daily order block before looking for the reaction short. And I still do believe that would have been the better play. However, what I need to understand is, or not so much myself in all honesty, what other traders need to understand is price will move in any which way it will. And of course, if you seek to follow your strategy, you're not in a bad position, you're in a good position. But having the discretion upon your strategy in order to use the DXY and understand potentially when a position could be ready to move. It doesn't necessarily mean I have taken a textbook short position here on EU, but what it does mean is I've used the DXY as the full degree of confluence to understand when price is looking to move potentially in my direction. And once you come to that conclusion, it's up to you as a trader whether or not you want to take that risk. So I had to balance the risk and said, well, here's my short position on EU. I absolutely know price could want to move back up towards that daily order block up here. Even more so, I could already identify a position in the market where price would look to want to gravitate towards. You can see by my risk to reward tool that I wasn't prepared to take a position like that. I had to stick by the position that I'm taking and respect that position and understand that this is a risky position and a position that if I don't accept that risk, simply don't take it. So based on the 4-hour time frame, I don't have any true confidence at all. I can't make it up. I cannot fabricate it. There is no 4-hour order block in and around this area. So this particularly was based off of the 15-minute time frame. Hence why the 15-minute time frame was the time frame that was showing when I started this video. So if we have a look at the 15-minute time frame, we can clearly see on the market, pardon all of the illustrations, but we can clearly see the 15-minute time frame made a push from this area. So of course, based on the 15-minute time frame, what are we, bullish or bearish? I'll ask you rhetorically. 1, 2, 3. We are very much so bullish on the 15-minute time frame. So therefore, here remains a key structure point on that 15-minute time frame. However, I'm not going to wait for that key structure point to be broken before then have price come back up, before then have myself the confirmation to say, okay, well, the 15-minute time frame is now bearish. I may now look for short positions. I want to take a position in between that to understand, well, if I recognize price is bullish, I don't want to buy at the highs. It's just not something that I can do. Where on this chart would I be comfortable to take a buy from? And that's down here from the 15-minute order block that in fact caused the push towards the upside. So if I've already understood and identified where I would like to take a long position from, I then have the ability to say, okay, then Charles, would you like to short down to that area? So that's phase number 1, let's say. Now I need to understand what price action is doing in between that in order for me to have the confluence, but more so the confidence to take a position down to those areas. I'm not a big fan of reversal trading, hence why bringing the DXY in to the circumference to actually build the full picture up to understand what exactly is going on allows me to do that with confidence. If I didn't have the DXY, being honest, I probably would not have taken this position on EU and I would have gone for the higher probable looking setup, which would be AU. Nevertheless, I do have the DXY and I use it every day as a confluence. It's the first pair that's always marked, or the first index that's always marked up. And if you go through my analysis, you will hear me say over and over again that the DXY is the king catalyst. When the DXY moves, we will see it move across all the other pairs. When it sneezes, so does all of the other pairs. So that's what I had to play with at the moment. So as I could say, we can see a structure point in on the market. Again, this is also, it's guesswork, it's also technicals, but it's down to your eyes and your perception. If I'm going to refine this down, we recognize that's a leg. However, we can do a little bit better than that to give us a clue or help us in understanding structural breaks. So if we start the process from here and say, here's a higher high, higher low, higher high and low, and that's confirmed as a result of a higher high in the market. As a result of the push down, we still have not broken immediate intraday structures. We have not done that. However, what we've done is we've pushed down, we've created a new low in the market, and that had then left us with an order block, which I was then looking to manipulate on the way down. So if we were to superimpose that on a blank chart, you can absolutely see areas in the market where you'd be looking for price to gravitate back towards. And that's really the dilemmas that I had. I think that one would have been a little bit higher. So up there. So I had two key areas where I was looking for price really to revert back down to. Now the third part of the phase. So we recognize that price intraday prospectively for today, we can say that price is very much so bearish. So therefore I want to get on the back of and join that bearish trade. So what I'm doing now, reverting back to the DXY and understanding, okay, so what's going on the DXY? Again, the DXY also had the perfect place where price would look to revert back to. If we say that here was a high, we would then expect price to revert back down for the higher low before the higher high continuation. Again, to repeat the process and to repeat the illustrations, if you look at that in terms of more intricacy, you could say a high in the market was created. We would then expect a higher low. Is there an order block? Yes, there was. It was mitigated, but using the DXY, the importance is that order block is respected. When we came back into that order block, we had a reaction. We pulled back down. We still respected that order block, which for me, this was the key confirmation. Because if I was wrong and this was nothing but a high, what would I be expecting to happen when price comes back down to here? Even if not the first, but certainly the second time. So I'll be expecting prices now looking to create what? The higher low for the higher high extension. The mere fact that price pulled back into that order block, respected it, gave us a push back out, came back down, respected it again, gave weak rejections towards the downside, telling me that potential buying pressure is in the market. I'm now expecting this. Again, it is an absolute risk. That is trading. We take managed risk positions. I was happy to accept the risk, understanding that if the DXY goes back down to this level before making the move back towards the upside, I would have been liquidated from this position here on EU, and I more than likely would have seen price push up into this 15-minute order block. For then, I would still be expecting the reaction towards the downside. With all of that said, I will show you happily the position that I missed. I was way too busy umming and ahhing between EU and AU, trying to balance the probabilities, trying to understand, do I take a textbook looking type of position on AU based on 15-minute time frame only? Asia range is available, looking to fill Asia to the highs. It was all looking good. Price came in, 4-hour order block rejection towards the upside, order block created, but then I had to understand. One moment, Charles. Rethink what exactly is going on. As soon as price made this low in the market, which understood just came into the 50-minute order block, but what we understood is, well, for the day, price has made a low. What happens after a low? We were expecting a lower high before, and then when price came back down back down to this area, I would have liked to have seen a reaction towards the upside, like on the DXY. But what did we have instead? We had the continuation lower low. So even now with AU pushing back up, you can see the trend. Once I get rid of all of these illustrations, it's just the most beautiful trend that we like to see on all time frames. We simply have a low in the market followed by a lower high, lower low, lower high for a lower low continuation. So that's exactly how the day has panned out today, team. DXY providing the full degree of confluence, but again, if I then open up the higher time frame points of interest, we were always on that side of the market on the DXY. We were always looking for DXY strength to come out of the market. So with that said, once you can understand the direction that you're looking to trade, let's say the DXY, or where is the DXY looking to go, you can then use that to your advantage, as I have done, to mitigate taking potential losing positions and actually focusing that energy on I haven't taken profit just yet here on EU, but regardless of the outcome, the process is what drives the finances. So if I'm able to continue with this process as I have been doing for the last, well, let's call it a decade now. I need to stop being conservative. For the last 10 years, you can do no wrong once you apply the process. So this, it is what it is for now. I'll see how price is looking by the close of business later on this afternoon. I'm definitely not going to be holding this through the night. More than likely, whatever, we're close to 1 to 3. So, I mean, I am in territory where I could take profit. But again, I see where I would like to take